I'm just going to spend a couple of minutes talking about digitization. You know, it's a key buzzword. It's used a lot in our industry today. But what does it really mean? What does it really mean to digitize something? And what are the benefits around it? So I just want to spend a few minutes kind of setting the table around how we think about it and really what the benefits are or could be for our $12 trillion industry that we work in every day. So the first slide is, what is our state of our industry? Well, as we all know, and we heard from the last speakers, it's incredibly fragmented. Every day we get emails, spreadsheets, PDFs. If we're really trying to go high tech and integrate into a customer, we may do EDI messaging or integrate through an API. So there's a variety of spectrum around how we get data. And it's incredibly challenging because all we want in an ideal world is one dashboard that helps us understand what our limits are, what our exposures are, and do the best possible lending and credit to our customers. And what we really need to do is aggregate that data together and take it from all these disparate places and pull it together so that we can make better decisions, faster decisions, and frankly, in the process, be a lot more efficient of how we do business. So digitization is a means to that end. And when we think about it, we break it into these 4 or 5 buckets. So the first thing is we got to read the data. Now that could be anything from a bill of lading with some really foreign stamp from Africa on it, and you got to extract the stamp off the piece of paper to really understand what you're looking at. That's one level of OCR technology. The other could be an API or spreadsheet. But in any way, shape, or form, you have to read the data. Now, if you're like me, just because I read something doesn't mean I understand it. So the next phase is you got to understand what you're looking at and think about it in terms of what am I looking at? Am I looking at a purchase order, an invoice, an insurance policy, and know all the parameters around it, how it works, how if I change one thing over here, it'll change something over here, to truly understand it as a digital object. So that's kind of the second thing in creating a digital object. The third thing is, okay, now that I've got that, what do I want to do with it? Do I want to share it internally? Do I want to send it down to the back office? Do I want to send it out to a customer? Do I want to finance it? Do I want insurance? So what do I want to do with it? And sharing is obviously attaching other relevant parties to that digital asset or invoice. The next step is the workflow. Well, how do I automate a workflow now that I got it digitized into some streamlined process that's highly scalable, highly repeatable, so that I can get off of email? Because email is a very, very inefficient way to conduct business. And I want to do it a much more scalable process way. So defining that workflow and putting that together is the next step. And then the final step, which you hear a lot about in today's world, is automation. How can I automate that step of workflow so that I can get on with more value-added things? So that's how we lay out or think about the framework for digitization. I hope you think that's useful for you and your framework. Now let me give you some real-world examples of what we're doing today to help our customers, some of them in this room, think about applying digitization to help them do business smarter, faster, and save money. So one example is, and we talk about this all the time, that a lot of banks in this room buy assets from other banks in this room. Distribution, multi-deal funding. And everybody's emailing everybody else terms and conditions and invoices the way they view the world. And so as a result, if you're doing it from 10, 20 different places, you have literally 10, 20 different ways of taking in that data. And you can't scale it. It's very hard to organize. And what ends up happening is you have humans on the other side just taking all that data, reading it, and typing it in spreadsheets. That, again, makes it challenging to grow your business. So we took this digitization capability that we spent $30 million over 3 years doing hard R&D work on, because you just can't say one day I'm going to digitize something. You really have to think it through and spend a lot of money and time true R&D. So we took this platform for a bank, and we said, forward everything you got. All the time, just forward it to us, and we'll digitize it, we'll read it, and we'll create an online dashboard for you to understand your counterparty risk, your credit limits, we can bring in your insurance limits, and it's a digital panel. The first time you can see your whole business of where your exposures are, digitally updating real time. So this was a great example, I think, of how digitization can really help our industry and our asset class become much more efficient and understand decision making and get off of spreadsheets in the front office and legacy mainframes in the back office. So that's one example. A second example in the middle and back office is you're dealing with tons of digit data coming in from a reconciliation process, right? I'm making a payment, I got a reconciliation over here, I got the invoice over here. How do I make sure they all match up? In the old way of doing things, it was very rule-based. If-then statements, if this matches this, then call it a day. If this, so how do you take it to the 21st century? Well, you got to digitize all the data to make sure you understand all those different forms coming in, step one. Step two is you can create algorithms that basically read it like humans. Well, I've seen this before, check, 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 it's a match. So again, we've taken this digitization technology for several banks and created a platform called InMatch, which does auto reconciliation in the back office at scale. And it's kind of funny, I used the term down below, what are one of the benefits? Well, it's faster. Well, when we released it to one bank, it started auto-reconciling so fast that the operator said, you got to slow it down. We, in our way of thinking, we need to check. We need to have four-way checks, so we slowed it down because the humans couldn't keep up with the auto-reconciliation process going on. But as confidence developed and realized that we were doing this at 98% accuracy, well, maybe I should just create exceptions to the rule and look at it that way. So again, an exciting piece of technology that has real-world implications for everybody in this room. And then third, one last example is a lot of banks use insurance when they're underwriting credit and trade. And the insurance policies are always over here. The assets are always over here. Sometimes you can do a job of saying, well, let me extract the credit limits out of the policy, put them next to my exposure to make sure I've got capacity. That's a great step. And back to my first example, we can now do that electronically and digitally. So that's a great step forward. Well, what's the next step? Well, out of COVID, as we all know, it was a very challenging time. And one of the things that happened was several banks, would go to their insurance company and say, this got paid late, blah, blah, blah. I want my coverage, I want to get paid. And they were denied because of the fine print, the different parameters. So how can we help through technology and digitization, banks or other funders understand and make sure that they'll be covered in the event of a problem later? How do we make sure that eligibility criteria, however it's defined, gets digitized and can help you know the answer without having to have a bunch of analysts comb through and read through the policy? So that's now a reality. We just did that for another bank in the last few months. So what my point of all this is that digitization is a means to an end. It's not an end unto itself. But I think through these 3 or 4 examples, you can now see the real direct benefits it can have to everybody in this room to do business smarter, do it faster, and be more profitable either by making more revenue or saving money. And I think this is an exciting time. I think we'll all look back 3 to 5 years from now and say, okay, that was a moment where as digitization and the capability to take all this disparate fragmented data came in, we were able to elevate our business and do it in a way we couldn't do it before. And it kind of reminds me of thinking like, it'll be so fundamental, and we'll be taking it for granted. It'll be reminding me of like my kids saying, how did I go to college without a cell phone? It'll be that fundamental. So thank you.
Perfect. Thanks, Jim. Appreciate that overview, and great to hear about the digitization innovation with front, middle, and back office. And I think further to your discussion, I think there's a notion in the industry that there's been a lot of focus on front-end digitization and not enough focus on back office. So as we think about that, we talk about that sort of innovation, how do you take those steps, and what are the most important components of those as you build that for each of you? You want me to take that? Sure.
Sure, I'll go first. So we're lucky enough, one of our largest investors is Broadridge Financial, which, as you may know, is one of the largest financial outsourcing firms for banks and fixed income and equity. So they see the opportunity through digitization technology to do what I described here for many banks and help automate the middle and back office. Because I think one important thing is, as much as I love technology and I think it's transformative and helps everybody, you also got to have scale. You got to have trust, and you got to have big InfoSec policies and data requirements to make sure that data is used properly. So it's not just about the tech, it's about the whole thing coming together. And I think those pieces now exist where, for frankly the first time ever in our industry, there's now going to be options where maybe I don't have to run my own back office, or maybe I can take in different pieces of technology to augment what I've already got to improve my tech. Because again, I think the cost savings over the next 3 to 5 years are significant, 30 to 50%.
So I'll say from our perspective, I think we're at an interesting time. Every year we work with BAFT and we put out a survey specific to trade technology. And we ask as one of the questions, what are the top 5 things you're focused on for the next years to make sure that you can meet your business goals? And I'd say over the last kind of 2 or 3 years that we've been doing this, I think we're up to our 3rd survey, the top technologies have tended to be, I'm looking at XYZ supply chain finance platform, I'm looking at a particular network that might be out there, I'm looking at blockchain generally. This year, what I thought was fascinating is that the top 2 things were your front office and back office modernization. So it really shows that as an industry, we've started to shift away from, okay, there's these really interesting projects, great press releases, whatever it might be out there, and saying more, okay, I need to look inside my own house and I need to improve that before I can go chasing down these interesting ideas. Particularly because I think the ecosystem and the space has settled down quite a bit and changed. And to that end, I would say there's a couple of core components that you really need to think about. One is, and I view this as like kind of an external and an internal, you need to think from an internal perspective about how you create efficiencies, how you get away from having any physical documents in the world of trade, create a modern standardized workflow, and then build all that around an API set. So that's one of the big projects that we've focused on, and I know that our competitors are kind of in the same space, because ultimately APIs are going to be the core to what you look at for that external component. And our ability to work from an ecosystem play with other partners in the market, which is important. And ultimately, we're all going to have to kind of play in that space and work collaboratively together if you really want to be successful from a business standpoint. As you were going through and talking about all great presentation, the kind of digitization angle, I'm also struck by just how expensive technology is today too. So as you go and make these investments, you should also be thinking about what you can do to drive down that cost of ownership ultimately. So our standpoint is that we happen to operate a SaaS application. We think that works for us. That may not be the solution for everyone, but you should be thinking about that element of things. And so that's the tech angle, and that's how you start to think about the collaboration component too. And the last piece that I'll mention in terms of like core competency for back office in particular is the AI space. I think that we're only starting to touch on what will be the future of trade payments, impact of artificial intelligence in that space. We've done a bunch of big IPA, intelligent process automation projects, where we've demonstrated the ability to do data extraction in such a powerful way, reducing just the amount of time that someone has to spend rekeying data, and also increasing or decreasing your operational risk around that, so that someone's not fat fingering something or missing a compliance party that needed to get scanned, et cetera. So I think all of that kind of taken together, the API, the AI side, and just thinking about your back office and how you modernize that, it's where we're at.
All right. So from our perspective, if you think about modernization and digital transformation even, The end game really is about data. How do you, better use data? How do you eventually monetize it? How do you leverage the data sets you have to improve your processes to get more to a more robust decision-making process? Now, if the question is about where do you start or what's the journey towards that end, it's really about first processes and efficiencies and integration. So as was said before, trade, it's a very fragmented market. There's still a lot of paper floating around, still a lot of manual processing, right? So first step really would be to look at what are the efficiencies you can gain from modernization of back office, right? How do you, to be very pragmatic, how do you optimize or automate a doc checking process when an LC gets presented and documents get presented under an LC, right? So that is really one of the examples where you would see efficiencies in back office modernization. The other aspect of that is integration, right? So Patrick touched on it, but basically APIs, integration, but not only internal, also external. How do you work with platforms? How do you work with platforms used by your clients? How do you work with partners, right? And how do you create an ecosystem digitized around your various trade activities to make sure that actually data flows from one system to another a bit more efficiently than having people key in, again, the same data set in various systems, right? Once you have that, then actually you can think and work on data, right? So it's AI, natural language processing, blockchain, all those are technologies, but really this is about how do you use them in the right set to actually, in the right order or for the right end, to actually create those efficiencies and eventually work on data sets a bit more efficiently.
Thanks. So as you think about all of that innovation in back office, excuse me, I think there's a lot of debate about partnering or building. And Jordan, I think I'll start with you on this question. What does a good partnership look like? Is it better to partner or is it better to build? And if you are going to partner, what are some key areas that you would actually look to do so?
Yeah, so there's no, there's a debate, but really the short answer is that it depends. It depends on the context, on the project, on, so we do partner, we do build, we do buy. It all depends on the type of project we're after, right? So if I take an example on data, right? So we are partnering with KPMG and with Google around a project for trade fraud analytics. And basically, it does make sense then to partner when you're talking about predictive analytics, because then, as a bank, you would bring the trade finance expertise, but then, a company like Google would bring a much stronger and robust experience around predictive analytics and data, right? And then working with KPMG to bring that framework around, how do we scale that solution? So that's an example where collaboration is absolutely key. Right? We would otherwise, build our own solutions to provide more transparency to our clients, and then, helping them to better track the process of letters of credit, for instance, having at every step of the way a way to connect to our platform and get an idea of where the transaction is, whether documents have been presented, they've been dispatched, they've been, right? And so that's really examples where we have a very pragmatic, opportunistic approach, I would say, around whether we need to partner or we build and we build a competitive advantage around that.
So for Pat and Jim, presumably you are the partners, but do you
I was going
also
to say, to keep my job, the answer is partner.
Yes, but do you also find yourselves partnering to pull together your solutions?
Yeah, so we sit in an interesting space, right? Because we're what I think would be viewed as more of a traditional vendor offering an application to a variety of different clients in the market. But ultimately, our view is not we're going to build everything ourselves. In fact, I think that's a very myopic or naive maybe view to be able to do, and it's extremely expensive as a value proposition. So instead, we kind of look at, okay, where do we focus? What products do we offer? And how do we partner with the right players to augment those capabilities? And I think there's a few models that make sense in that space that you're just never going to be able to beat. One is if you're partnering with someone who has a network effect, so requiring you to have a variety of different participants in one space to pull together data that you'd have to go and kind of retool yourself and build that network. Usually not worth it. So I'm thinking of something like a Moneta Go, where you're going back and passing a bunch of data across multiple different banks. If there's a captured market that's already out there, you should be thinking about that partner side, because they already have business that you can originate off of. If there's something that's a high cost to build and ultimately has a high risk of failure, I think that's where you also want to think about it. So all of and there's a ton of them in the room, I think. These platforms that are looking at intelligent process automation, digitization, those sorts of things, it makes total sense. You don't want to just go out and build that yourself. Every once in a while, we work for a very huge company. Someone will come to me within the company and say, oh, we want to take this concept of AI and apply it to trade. And I'm like, look, there's already 8 other people that do this, and they're probably light years ahead of you. It's a waste of your time. Don't bother starting from scratch, right? Don't rebuild the wheel. I think that's what you have to think about, and then make sure that those partners that you're talking to are strategically aligned with your values, are going to be actual partners, are not going to become someone that you get in deep with, and then you realize, oh, when I need them to fix something, or when I have a very important client and I'm running in production, they're not going to be taking my phone call. They have to be there, they have to be responsive. And then also understand what their long-term strategy is, because a lot of these fintechs that are out in the market, they're small. They may be picked up by someone else, they may have their own plans, they have a pathway, they have a journey that they're on, and you should be aware of that before you start a project. And frankly, before you even begin to invest money in something as small as a POC. You have to be thinking very proactively about what the future course is for you. All things we've kind of learned in our journey as we collaborate.
So totally agree with all the points you made, especially about partnering. And it is a difficult choice. And I think beyond the technology and the economies of scale and the networking effect and all the digitization benefits we're talking about is back to trust, best practices, and scale, these intangibles. So you need the tech and you need the intangibles at scale to say, I'm comfortable going down a path of either just taking different pieces of technology and or going all the way and looking to more of an outsource. And again, we're trying to thread that needle by using LiquidX technology in partnership with Broadridge, who basically is the biggest back office provider for all the banks and many asset classes, to kind of offer that solution.
Okay, thank you. I know we have a trade-heavy panel here today, but it would be remiss if we did not touch on payments for a second. So I know there's a big push, of course, for cross-border and instant cross-border payments and/or speeding up of payment processes. So how do you see, and what's important to you when it comes to the payment lag of settling trade transactions, and what's important to you in that space in terms of whether it's cross-border instant speed, or whether you're okay with how things are going today?
I'm happy to take this the first.
Okay.
So I have to be careful, because I know enough to be dangerous, and there are plenty of payments experts in the room. So I may say something a little bit controversial. And I go back to my days when I was on the Fed's Faster Reserve or Faster Payments Task Force. One of the things that came up frequently in that context was, give me use cases. How valuable is this versus the technology investment we're going to have to make? So I think faster and near instant payments, it's kind of inevitable. I wonder in the world of trade, in particular, is there what's the real push to make it even faster? Is there an upper threshold that we kind of get to and we're comfortable with that, or do we have to be driving for the instantaneous, real time? And not only that, but what's the ultimate impact as that flows from a transaction monitoring process too? You got to think about that end of things. So many parties involved in a trade transaction in particular. You don't want to accidentally have something going out the door that you realize, oh shoot, I shouldn't have had that going out the door because XYZ process didn't come through the right way. So maybe a little bit of a controversial viewpoint, but
Next point. Well, you touched on something that's important. I think we talked about this as well previously, and that's friction. So I think there's the concept in both payments and trade of good friction and bad friction. Do you think there's such a thing as good friction, and how you run the businesses?
All right, I'll take it.
Jordan.
So, no, I don't necessarily think there's good friction. I've not heard of it yet. The point is that what we've seen more recently is that given the change over the past year in interest rates, clients are really keen to improve turnaround times around collection processes, for instance, right, related to trade, and make sure that there's a natural connection between their trade activities and cash related to it, right? So another example is, supply chains being where they are now, and suppliers sometimes having to wait a bit longer to be paid, and they are a bit more exposed then to potential currency risk that were not necessarily there maybe 18 months back, given the market being where it is now. Now, this is where having bundled offer around trade and FX, for instance, it makes sense, right? And make sure that we have the right type of offering to our clients. So both on making sure that trade and cash are absolutely connected, but also the FX piece come into play. So the more we can remove friction from those movements, actually the better it is for our clients. And there's clearly a need now in the market for that type of bundled offering.
Yeah, I'd say friction is kind of a necessary evil, right? I agree. I have a hard time thinking about good friction, but I think there's necessary friction, particularly from a regulatory standpoint, that exists. And everything we've talked about here is kind of geared towards how do you reduce that friction? How do you create a much more seamless process? And also offer, going back to the payments point, some transparency into what's actually going on, which I think that we've seen much more progress in that area in the market. But I think that if we can get to a place where we take, for example, some of the compliance processes, you overlay that with some of what we've got in the OCR and the AI space, you're going to reduce as much of the friction as possible. It's still going to be there. There's still going to be instances where something gets flagged, you get a false positive that pops out, and you have to have someone go through and review it. But it's better to have that be the exception scenario rather than it's you're constantly getting false positives, or you've got a lot of manual process to review every single document. So what we're kind of talking about here is how do you reduce that friction but keep the bare minimum to kind of keep everyone happy from a compliance end.
So when I think about friction, it's really about checks and balances, and credit checks, insurance checks, any other ESG checks down the road, whatever it may be, to make sure we got the right criteria in place. And how do we use digitization technology to make those checks accurate and streamlined so that the final decision making can take place and then the final payments can be made. And there's so much room for improvement in that space that's what excites me to really help the industry move forward.
Good. We'll switch gears for a second and touch on ESG. I think you touched on ESG in a lot of sessions here, but I think there's a lens that I wanted to take with you all today. So there's a sincere focus, of course, across the industry as companies focus on meeting their net zero ambitions. How has this tied to the innovation efforts that you've worked on, and further to partnering? What effects is it having on the decisions you make to partner and who you choose?
So taking that criteria and digitization and being able to read something and understand it, right? Well, if I've got a criteria of ESG and I can read something digitally, then I should be able to say, does this meet my criteria? And if the answer is yes, then I know what to do with it. And so that's how we're applying this broad capability around digitization. We're not helping banks or others come up with their criteria. We're helping them implement their criteria, because it's just so hard and impractical to do it, especially if you're dealing with a lot of intangibles. The math side's easy if it's numbers, but if you actually have to read languages or different things to kind of go a little deeper, that's obviously trickier. But that's where we're spending our time to try to help implement some of those ideas.
Yeah, and I think the ESG side is kind of a fascinating one. I think in this notion of kind of build versus buy. I don't see how we solve some of these ESG challenges without partnering, collaborating, working collectively, whether that be with a third party or kind of amongst ourselves. We've done, we've taken forays, we've done, conceptually sustainable supply chain finance, worked with the likes of Salesforce, et cetera. But, that the scoring, the metrics, I think there's a number of partners in that space. I feel like that is a necessary evil. I don't think you want to build something yourself. And there are some technologies out there where they've pulled in so many sets of data that are available and are churning through that and making available to banks a lot of information about their corporates, the underlying transaction, et cetera. I don't see the value in trying to rebuild that. I think it's too complex. What I hope we see in this space, and this is a little bit off topic, but is a bit more guidance, because it still feels to me like we're early days and there's a lot of lip service that's paid to this, but in particular in the trade space, I think there's a lot of missed opportunity too. I think we have a pivotal role to play, and I hope that kind of over the next 3 to 5 years, it becomes much more clear what we need to do and the steps that every bank needs to take consistently applying standards across ESG. And I know that there are a ton of initiatives in that space, but.
Absolutely agree with the point in terms of partnership and the need for guidance, right? So the ESG session actually yesterday was interesting. You see that there was a need for a better regulatory guidance sort of around the aspect. But beyond that, and coming again to supply chain and sustainable supply chains, right? There's a lot of recognized third-party certifications around sustainable practice from suppliers. It's extremely important to a number of our corporate clients in their supply chain practice. So when it comes to supply chain finance, and if you want to develop a sustainable supply chain finance offer, this is where you come to partnership with those certification bodies. That translates into data, right? Translates into data around suppliers' practices, data around traceability of goods and whether they've been produced in a sustainable way. That entire data set coming into the supply chain, then fed into the bank in terms of how do we then select or assess the practice of suppliers is really the way forward, right? And that comes with collaboration, partnerships, and guidance.
So touching on talent, so there's been a few years there's been a significant talent crunch across the industry, both in banking and tech, in particular in tech. What's been your experience, and how do you believe it's impacting innovation and your ability to sort of build what you need to build?
So I can take this kind of from the tech angle, and there definitely is a crunch. It's getting more expensive, harder to get the right talent. From our perspective, we kind of act as the tech arm for our banks. So what they get is the benefit of a 90,000 plus person workforce, where we can pull in the talent that we need to when we need it and replace that fairly easily. There's still effort, and then be able to apply that for our customers. I think if you're not a big global bank, it's getting harder and harder out there to find the qualified team members that you need to keep building and driving your product forward. And I don't think that's going to get any easier, unfortunately. I'd love to say it will, but I think it's only going to get more difficult in that space. And that's not touching on that's the pure tech side. I think there's a whole other talent gap that will probably come up in the future conversations, but I don't think that challenge is going away at all.
Yeah, so trade finance innovation, right? So basically we need trade finance talent and tech expertise as well. On the tech side, yes, it's expensive. Yes, talent is scarce. But on top of that, over the past few years, there's been a clear, the market becomes extremely fragmented and very niche, right? So basically an API expertise is not natural language processing expertise, which is not blockchain expertise, which is so, as a bank, if you would want to hire a head of distributed ledger, a head of API, a head of, that starts to basically create a very heavy cost base for your innovation. And that's where partnership becomes key, right? That's where actually, back to what Patrick was mentioning, rather than trying to build something which is already out there or with an expertise you would need to develop internally, it's much better to basically leverage that expertise outside of the bank from a tech standpoint, especially given how niche and developed that has been over the past few years. On trade finance, I think it's very hard to take somebody out of university with strong expertise in letters of credit or bank guarantees. So really it's about how do you train, retain talent in that industry, and how basically do you create an environment where around a number of the innovations actually we lead as an industry or we have as an industry, right? And we partner with others. So how do you then attract talent around those initiatives is really key to actually create leaders for the next few years.
We spent a lot of time thinking about talent because my career I've seen over and over again where one A program or one star can run circles around 4 or 5 B or C player developers. So we're always in search of those special A players. And it's hard, right? You say you're in trade finance. Well, trade finance or Google, where am I going to go? So,
Trade finance, it's easy.
But really, when you parse it back and you understand the problems of the industry and that trade finance actually makes the economies of the world work, right? It's so fundamental and needs so much help that you can draw them in because they're drawn to the bigger problems. And back to this whole industry, which we've all talked about being so fragmented and so unstandardized, that technology can really be that virtual standardization layer through digitization. That it gets, we found we have a really core group of really passionate engineers that are really driven to the success around that and really get a real high from talking to the client directly. And usually they're kind of tucked in the back and can't have that interaction. So that's how we go at it to address it, but it's tough.
And not for nothing, by the way, the fact that banks are becoming much more technology driven does make attracting that next layer of talent a little bit easier, because if you're working on, if I'm a doc checker that's just reviewing a set of documents for discrepancies, that's one thing. If I'm the guy that's working on the AI platform that's going through and automatically doing a doc check for me, and I kind of have to have some knowledge of UCP and the rules, but really it's more about me tuning the system and checking for exceptions. That's a totally different experience. And I think the next generation is kind of going to be expecting the latter rather than the former. And unfortunately, we have a challenge in terms of the graying of the industry, quite frankly. So,
Good, thank you. Well, that's all for my prepared questions. I wanted to see if we have any perhaps in the Slido that for the surprises. Anything in there? Anything, Arlene? Nothing? All right. Any last minute questions from the audience? If not, then we will adjourn. Great, thanks so much, Jim, Pat, Jordan. Appreciate it so much. Appreciate the insights in your trade industry and appreciate the time.
thanks,
Thank you.
sir.